Welcome back to our webinar series, Building Sustainable Futures, Global Challenges and Possibilities. I am Klaus Weber. I'm serve as the Deputy Director of the Northwestern Buffett Institute for Global Affairs. And in this webinar series, we consider a different United Nations Sustainable Development Goal each quarter. This spring, our focus has been on SDG 10, Reduced Inequalities. The series is co-sponsored by the Northwestern University Community for Human Rights. What we do in the series is to explore social and economic inequalities in a global context, the underlying sources of which had often been brought to the fore and often magnified by the COVID-19 pandemic. And so we look to understand the systems and conditions that produce inequality, how they are modified, amplified by the pandemic, and importantly also, we're looking for paths and policies available to us to create more just and equal futures. Today's sessions, I'm super excited to welcome two brilliant and widely respected development economists. Chris Udry is Professor of Economics at Northwestern, and Robert Osei is a professor at the Institute of Statistical, Social and Economic Research, as well as the Vice Dean for the School of Graduate Studies at the University of Ghana. And what they will do is they'll share some recent empirical work on the effect of lockdown policies in urban areas since the onset of COVID-19 and the effects on employment, income, and food security in Ghana. They will also talk about a program of mobile money transfers, how that affected social distancing, food security, and work patterns. As always, we will also invite a discussion of the broader questions and insights that are highlighted by this research. And so we hope we had to have a very lively discussion in the second half of the session. But for now, welcome Chris and Robert, and thank you so much for being with us.
Thank you, Klaus.
Thank you very much.
So,
okay, Robert, I hope you can see that.
yes, I can. Thank you. All right, thank you very much. And so I will get things started and then Chris will also come in at some point. So today we are speaking on the socioeconomic consequences of the COVID-19 in Ghana. And essentially we are going to be talking about three key things. One relating to some of the immediate impacts of the COVID and the policy responses that it has engendered and what the implications are for households, livelihoods, food security, and then finances of these households. Then secondly, we would also look at the specific aspect of the lockdown in two main areas of the country and what the implications of the lockdown was for economic activity and more specifically on employment, both in the short term but also in the medium term in Ghana in 2020. Then finally, we will also speak to what role income transfers did play or can play in terms of increasing food security, but also generally in terms of how people adhere to these policies, which will tend to, in fact, limit the extent in which they engage in economic activity when there is the COVID. Okay, so the studies that inform our discussion this afternoon are based on actually four surveys. The first relating to the research in effective COVID responses survey, the round one of that, which was actually undertaken in May of 2020, and it is covering a sample of about 1,600 and based on telephone interviews with households in Ghana. The second survey, which addresses the second question, was also undertaken in August, and it's actually based on an earlier survey that we've actually, a panel survey data that we have. And more specifically, the third round of that panel data, which was collected largely in 2018. And so we selected working individuals from that sample and then actually tried to address the questions relating to how the lockdown has actually impacted on economic activity and employment and for these households. And what we do then is to look at the lockdown areas and then the areas that didn't experience the partial lockdown, and then compare how the key outcomes of interest fared. Then the last, which relates to the income transfers and how households have responded in terms of food security and indeed adherence to the social distancing sort of guidelines, is based on a subsample again of the socioeconomic panel survey, essentially the lower half of the income spectrum of households within the survey, but specifically those that have access to mobile money accounts. And we actually base the research on 2,500 households, half of these receiving the treatment and half receiving control. So generally, the first cases of the COVID-19 was recorded in March of 2020, following which there were a series of measures to try and then control the spread of the COVID in Ghana. And so by the end of March, the government had decided, because the cases were not reducing, initially there were measures such as the stop of large gatherings and limiting gatherings to a maximum of 25 people, wearing of face masks, washing of hands, and all the usual protocol. But the numbers didn't change much. And so by end of March, the government instituted a lockdown in 2 of the most populated areas in Ghana. Also, over the period, somewhere around April, the IMF granted Ghana $1 billion as economic relief to help deal with some of the downsides of the COVID, particularly in relation to the government's fiscals and its ability to respond to some of these social interventions that it had planned. And so government, as part of its measures as well, by July had decided that it was going to grant some reliefs for those who were frontline workers, largely nurses, and then also those in the security services. So in terms of the surveys that I mentioned, the Recover survey was actually, the first one was undertaken in May, between the 6th and 26th of May. In terms of the survey that looked at the lockdown and then its implications for the employment and economic activity, that was actually undertaken in August and early September. For the survey that, or the series of surveys that looked at the implications of income transfers and what it meant for households in terms of their food security and also the household food security generally. Again, that started in May, and then it ran through to December of 2020. So overall, I think we've had about 5 surveys that have been undertaken over this period. Now, the COVID cases in Ghana have actually, compared to what has happened in the other parts of the world, Ghana has had just about 93,000 cases cumulative. And of that, I believe that the recovery rate is close to 98%. So we've had 91K recoveries. We've had 780 deaths, unfortunate, but still quite low relative to what has happened in other countries. And currently, I think as at last week, 26th, 28th May, I believe that there were just around 1,100 active cases. But largely, you would note that it's the Greater Accra region, the Ashanti region, Western region, and the Bono East region that have the largest concentration of cases over the period. So I'll stop here and then Chris can continue with the highlights from the recovery. Thank you.
Thanks, Robert. Okay, so I'm going to talk about the first early survey that we managed in Ghana soon after the COVID pandemic hit Ghana. That's not working. There we go. So this survey, as the other two that we'll be talking about, are all based necessarily on phone surveys. And so we weren't able to send enumerators into the field because of the danger of contributing to the spread of the virus. So we're relying entirely on telephone surveys. Now that's a problem, right? Because not everybody in Ghana has access to a cell phone. And so first thing to be concerned about is whether we're getting responses from a representative sample of people in Ghana. And the answer is, of course, we're not. We're only able to talk to people who have cell phones, who aren't everybody. So the samples that we'll be talking about are younger than we would get in a household survey where we were able to go and see people in person. They're more male, they're more urban, they're more educated, and their household sizes are comparable. But everything we'll be talking about today will be from a biased sample. We're missing some of the more rural and the more poor populations. So keep that in mind with everything that we're talking about. Those people that we could reach reported, especially early in the beginning of the response to the pandemic, significant increases in virus mitigating health behaviors. So more than half of the respondents reported staying at home all day for over 4 days a week. So that's remarkably different from what you get in a pre-pandemic situation where nobody would report that. 90% of respondents report that they have more frequent hand washing since mid-March. 90% report wearing a face mask. Now, all of these responses are surely contaminated by social desirability bias, people telling an interviewer over the phone what they think the interviewer wants to hear. So there's surely some bias in that. In fact, there's some evidence of that, of some bias in other responses in other countries, not that I know of in Ghana, where people are over-reporting these kinds of responses. Nevertheless, there's at least some evidence that people know that this is what they should be doing. At the same time that they're reporting, taking measures to mitigate the chances of them receiving or spreading the virus, they're reporting serious economic consequences of the pandemic and the policy responses to the pandemic. So 1 out of 5 report that their places of business were closed when we had interviews with them in May. Almost half reported that their earnings had decreased since the pandemic began. And 30% of them reported working fewer hours than they had in the past week, than normal in the past week. So this is true actually across the board for both poor and rich people. Almost everyone, and both rural and urban, almost everyone in our surveys was reporting declines in income, in hours, and opportunities to work. About a third of people, 30%, report shortages in markets that prevented them from buying food. And that 60% of them reported drops in income prevented them from buying food. 2/3 reported the price of food was too high to maintain their consumption expenditures. And almost half, more than 40%, say they've had to limit portion sizes or reduce the number of meals in the past week. All of these responses that I just told you about here were worse amongst households with kids. And so if you had kids, all of these numbers were higher. In order to try to deal with the consumption crisis that people were facing as a consequence of the pandemic, people reported taking a variety of measures. The most important measure was that they were depleting their savings. Again, poorer respondents were more likely than wealthier respondents to report having to sell off assets to pay for food or healthcare or other expenses. And they also reported skipping payment on loans and buying fewer inputs than planned for farms or businesses, or borrowing money that they thought they might not be able to pay back. All of these one can anticipate having consequences further in the future as time came to continue farming or to harvest or to pay back the loans that they might not be able to make the payments on. And finally, the major thing that came up in interviews was people being worried about their kids and about the effects of school closings. Now, the school closings began right after the epidemic hit, and they've continued for a very long period, much longer than the shutdowns in work. And people are very worried about kids falling behind in education. So that would be the primary concern of many of our respondents. And this will have consequences, obviously, over the long run. So that's something that we'll be keeping an eye on over the next years. Now, Robert will talk with us about more of the economic consequences that we've been able to follow as the pandemic has evolved.
Yeah, thank you, Chris. Okay, so here what we sought to do was to try and understand what the lockdown meant for people who actually lived in these areas, and more specifically try to compare how they fared with those who did not live in the areas where there was the partial lockdown. But largely what this research shows is that it had an impact, almost immediate impact on employment, and also specific to the lockdown districts. And it was more, it was highest for those who were actually in the informal sector. And I think so for those who do not know, Ghana, like many of the African economies, have quite a large informal sector that employs the labor force. The interesting thing, I think, what we also find is that 4 months after the lockdown, when the lockdown restrictions were eased, in terms of the impact of the lockdown, it had almost dissipated, so that the districts where the lockdown actually happened versus the districts where it did not happen, there was no significant difference in the effects, employment effects. However, when you compare overall the position of employment 4 months after the lockdown to the pre-lockdown period, you do see that the effects generally of the COVID had persisted, even if the lockdown specifically effect had actually dissipated. Now, a stringency measure, which actually captures how stringent the lockdown measures have been over time, shows that essentially in the period when we had the lockdown, which was between the end of March to the 3rd week of April, the gray bar there actually captures the stringency measure for the 2 districts that experienced the lockdown, the Accra, Greater Accra metropolis, and then the Kumasi metropolis area. And so in those 2 areas, of course, the stringency index was 100%. However, for the country as a whole and based on the data, what you do observe is that the stringency index actually increased over the period of the lockdown, and then it did decline after the lockdown, but not to the pre-lockdown levels. Interestingly, we also do observe that the number of COVID cases actually shows an increase. Even over the period that we had the lockdown, it still was increasing and peaked around the July to August period. And from that period, it has actually decreased quite significantly, so that the daily cases have been actually quite low even to date. So what is also clear is that the lockdown areas tend to be areas where the density, the population density was very high. And so in terms of trying to understand or compare these lockdown areas with the non-lockdown areas, what we then tried to do was to create a kind of a threshold in terms of population density. And we benchmarked that threshold at 300 persons per square kilometer. And the 300 persons were essentially consistent with the lowest amount of the lowest level of the density for the lockdown districts, so that we could actually compare, if you like to like, over the two areas in terms of the lockdown and then the no lockdown districts. So employment trends, generally what this slide shows is that the employment in the lockdown areas was much lower than employment in the areas which did not experience the lockdown. And we also note that so you had the pre-lockdown period when we collected the data was for February. April was when we had the lockdown, and then we also collected the data in August. That is 4 months after the lockdown was lifted. And what you observe is that in April, the lockdown versus no lockdown area in terms of the employment statistics at the extensive margin shows that the areas of lockdown had a lower employment rates than those that did not have the lockdown. Also interesting is the fact that by August, the employment status for the two districts, i.e. districts where the lockdown pertained versus districts where there was no lockdown, you find that there is no significant difference between the two. But also interesting and consistent with that is the fact that for the majority of these households, the loss in employment was actually temporal. Okay, it wasn't permanent. And it's therefore the reason why you actually have the recovery in August of the year. Now, the pandemic seemed to have actually impacted the most when we asked households in terms of the areas where they thought the pandemic had actually impacted them the most. The number one area had to do with the incomes and employment, okay? And they argued that it is the fact that they had to actually stop work related, and no, they had to stop work because businesses were actually closing down. Okay, now note that this is a survey that is based on respondents from the given population, right? But this result is also consistent with the business tracker surveys that the Ghana Statistical Service did in 2020, where they also find that essentially for many of the businesses, I think it was about 40% of the businesses, they reported that they actually had to close down. And for 50% of them, they said that they had to actually reduce the wages of their employees. Again, what that means is that not only did employment levels decrease, but also at the intensive margin, the incomes of those who were actually working did decrease. And finally, like I said, so for those who are working, if you take the pre-pandemic era or period, and those that experience a decline in employment, what you do find in this graph is that the majority, the significant declines were actually for those in the informal sector, and particularly those in the self-employed informal sector. They experienced the biggest hits in terms of the impact of the lockdown. And it is not surprising, again, for many of these households in the spectrum of the income distribution, you find that they will typically be on the lower end of that income spectrum. Thank you, Chris. You may continue.
Great, thanks, Robert. Okay, so given the shock to the economy of the COVID epidemic and government's response to it, the needs to try to slow the spread of the virus, and the employment effects that Robert showed, the government of Ghana, the Ministry of Finance, was interested in thinking about how to increase people's access to social protection services during the pandemic. And so we designed an experiment to see how we could find a way of transferring resources to those who need it during this pandemic. So we designed a randomized controlled trial in which we would select households from the bottom half of the distribution of income in our pre-existing study sample in Ghana and transfer resources to them in the only way that could be done during the pandemic safely, and that is through mobile money. So again, we're only able to reach people who have access to mobile phones and to the mobile transfer network in Ghana. We arranged to take a sample of 2,500 of the poorest households in our sample in Ghana, who, although poor, had access to mobile money services, and transfer resources worth about $40, let's put it into an appropriate unit, transfer resources equal to weekly household consumption expenditures of our study population in Ghana. So we tried to get them transfers once a month that were equivalent to household expenditures on a weekly basis. So it ended up being about a quarter, the transfers were worth about a quarter of normal expenditures for the household every month. And the idea is that by giving households transfers of money through mobile money, they would be able to accommodate the income losses that would result from complying with social distancing requirements. So by withdrawing some of their time from their market activities, they would suffer a loss of income, but they might be able to compensate for that with the transfers that we were able to get to them. So the study was designed as a randomized controlled trial to take a set of households and divide it randomly into treatment and control subsamples. The treatment households would be getting these 90 CDs every month for approximately 8 months. And the control household would be getting only the first transfer, just as a payment for participating in the study. So we're going to report to you on the receipt of a sequence of 5 transfers that people received as part of this study, and a series of 5 surveys undertaken at about the same time, so that we could monitor the effects of these substantial grants that individuals received in order to help them deal with the consequences of the COVID epidemic. Okay. So what happened? What happened when, if we compare households who randomly were assigned to the treatment group to receive these substantial cash transfers? I call them substantial cash transfers because they're approximately 3 or 4 times as large as the transfers that households got from the main social security program that exists in Ghana called LEAP. So these are much more substantial transfers than they would normally get. The reason we're trying to give them relatively large transfers was because of the dramatic losses in income that people were reporting as a consequence of COVID. So what we find is that in comparing treatment group to control group, the treatment group households were able to socially distance significantly more than the control group households. So the transfer program worked in enabling people to respond to the requests to socially distance themselves. The primary things that they were doing was staying in their households more and going to the market less. We don't find any effect, however, on the symptoms of COVID that people report. And so there's just literally no difference between the treatment and control group in symptoms related to COVID reported. That's not that surprising given the relatively small realizations of actual COVID in Ghana. People in the treatment group, there's some indication that they earned less income in that past week, but their total income doesn't fall. That's because of the transfers. Then the major effect that we see of transfers that people got was that they were able to resist the declines in food expenditures that control households saw. So the difference between treatment and control households in food expenditures is significantly, statistically significant and large, about equal to a quarter of food expenditure. So there were substantial grants to individuals in low-income households. They led to increases in food consumption and compliance with social distancing. There's no observed effects on labor supply in the long run. But food consumption increased, especially in rural areas, and especially amongst non-Christians, mostly in the north, the poorest part of the country. No significant evidence there was any effect on COVID symptoms. But interestingly, perhaps to the government, there was a strongly significant effect of people being less worried about the economic impacts of the COVID epidemic on their economic futures, those who were participants in our studies. Female-headed households in particular increased food consumption. Male-headed households really didn't. Female-headed households increased their income when they had the grants from us, much more than male-headed households did. But in the study that Robert reported, female log income was decreasing at a faster rate than men income was, probably because female income is more concentrated in the informal sector than male income. But there were no observable differences between male and female headed households with respect to compliance to social distancing. Okay, so what we find is a strong effect on consumption and social distancing from the cash transfers, but no effects on non-food consumption and small effects on income. All right, so thank you very much, and we're happy to answer questions that you might have.
Thank you so much. This was really interesting insights into what exactly happens, in those circumstances. I want to start with maybe a broader question, and I know your data and your survey looked at the household end of it and the in the labor market. Do you have any sense of the supply side factors in the differences that you saw? Like, are there sectoral differences in terms of what employment was most affected by the lockdown? Was there differential lot of employment for certain types of jobs that would affect different people differently?
Yes, Robert.
Hi. So yes, again, sorry, am I on?
Yes, you are. We can hear you.
Oh, okay. Yeah. So in terms of the sectoral sort of analysis, in this study, we didn't look too much about the sectoral analysis. However, in the bigger survey that the Ghana Statistical Service did, they did look at the sectoral issues, and I've done some work with another colleague here, looking at what the implications were for firm level firms generally, particularly those in the small and micro categories. Now, what you tend to find is that in large, those that were in the ICT area, related firms didn't do too badly. However, you do not find any systematic differences for any of the other sectors, except rather the driving variable which explain differences amongst the firms were actually firms' ability to, or firms that were more prone to using ICT bases as part of their sort of production. And you can understand why, because what the mobile money sort of penetration meant was that for those who could not effectively engage in economic activity because of the fiscal restrictions, meant that they had to actually engage via the ICT platforms. Also, those who were doing mobile money transfers, because people couldn't actually move around as they normally would, again, mobile money transfers also saw some significant increases. Those who were actually engaged in those activities at the micro and medium level. So otherwise, you did not see any significant sectoral changes. For those who were involved in agriculture, for instance, you'd find, of course, in the labor survey, we did not particularly include those in the agricultural sector. But if you look at the macro data points to not much changes in the agriculture production. Okay, so it was largely manufacturing, and again, even for the manufacturing, you find that a breakdown shows that those that were more inclined towards the pharmaceuticals were actually not doing too badly. Thank you.
And do you see the, because you found quite clear effects for differences between the informal and the formal sector of the economy. Is that due to the different employment relationship, or does the informal sector map onto a different type of employment that is more prone to be disrupted by lockdown?
Absolutely, absolutely. The informal sector employments generally are more vulnerable, very, very variable. And you find that the biggest decline there was for those that were in self-employment as opposed to even the wage employment. So even for the informal, those who were in informal but in wage employment saw a decrease, but not as much as those who were actually in self-employment. And it is essentially, again, because of the very fluid nature of the employment contracts for the informal sector. And like Chris was also alluding to, for those, the informal sector is also the place where most females will actually find themselves in. Now, the part of the implications of the COVID restrictions was that you had more children at home. So what it actually then meant was that household production had to be now skewed in favor of home production, if I could put it that way. So you find that more of the females were staying at home to take care of their children because the children were at home and couldn't go to school.
Okay. So I think that there's a lot of sort of interest around the sort of unpacking what the lockdown and the pandemic measures actually meant and did. So one question we got was about travel restrictions, which is different from what you looked at. But if you look at, for example, the tourism sector, would you expect more sort of long-term effects of that? And would you then expect the interventions that you identified to address the lockdowns in terms of moving around and staying home, would they be equally effective to address some of those other forms of COVID mitigation that we see across the board? So it's sort of bringing it to a sort of more of a policy level aspect. You know, where if I need to do something to control the pandemic, which of those different measures sort of have effects that can be mitigated by some of the interventions that you identify?
No, I mean, generally, I think that this is one area that has attracted quite a bit of discussion, in large because the tourism sector is pretty much dominated by conference tourism. And so what the travel restrictions meant was that largely, even those who were doing the leisure tourism, of course, couldn't do a lot of the travels that they wanted to. But more importantly, for the conference tourism, it literally came to a halt, particularly over the lockdown period. And some of these variables were important in the decision as to why the lockdown was lifted at the end of April, when actually the COVID cases were actually on the rise. Because I think the balance between lives and livelihoods became very real, and given already the constraints faced by the government in terms of its physicals, it couldn't support more of some of these social measures, and therefore had to make the not so pleasant and not so popular at the time decision to lift the lockdown, but rather emphasize on quote unquote self-preservation, where it encouraged people to use the masks and then sort of adhere to the social distancing rules. Thank you.
So another factor that seemed to matter, and I think Chris, you mentioned that in the beginning, is the sort of household and family structure in terms of how many children, for example, in the family. Could you unpack that effect for, you know, what is actually going on in terms of what's the mechanisms that drive the effect? Is it simply having a, you know, less of a buffer to absorb shocks? Is it about the children not being able to go to school, and so it helps us understand exactly what this variable actually tells us about how those things work.
Yeah, that's a great question. We can't be sure of the reasons. Both of those hypotheses are almost surely at play. There's evidence that one of the coping mechanisms was dissaving and selling assets. And when you have a higher dependency ratio, more kids, less workers, that's a more difficult thing to maintain consumption and maintain needed expenditures. And so it could be the financial consequences of a shock are magnified when you have kids and less margin of adjustment, especially when it's the informal sector that's being affected more, and self-employment that's being affected more, because that's one of the ways you could, in other cases, absorb some child work, actually, to help with your self-employment activities. So that's probably part of it. But my guess is that a larger part is the school closing. And so you're losing access to school feeding schemes. And this is probably the more important effect of having kids. There is the mysterious, still to me, stronger effect that we see of our cash transfer program for non-Christian households, which may have to do partially with different demographic structures. Larger households in the Muslim North than in the Christian South may be part of what's going on with that effect that we see as well.
I'm going to throw in one very specific one, and it's about, I think it raises a really interesting aspect of it. Was migration to rural villages a coping factor? Or did you see other sort of adaptations to the employment loss and the sort of lockdown, which affected only urban areas? Is that right?
Correct. The lockdowns were just in urban areas. So, Robert, do you want to say anything about that? I'll have something to say after you do.
Yes, it was largely urban areas, and the migration aspect came in because of the restrictions on funerals, which so it's almost a temporal kind of migration where people actually move to the rural areas for funerals and then for a weekend or a week, and then they are back. But with the restrictions, what it meant was that even the movements for that particular reason was curtailed. So definitely the migration did take a hit as well. And it wasn't necessarily because of the restrictions on, or the lockdown per se, or restrictions on travel per se, but rather because there were restrictions on gatherings. And in the beginning, I think it was about 25 persons, not more than 25 persons, and then it went up to 50, and now it is at 100. But again, currently it's just in theory, I believe.
Yeah, so this is interesting because in India and other parts of South Asia, we saw massive urban rural migration as a consequence of the onset of the pandemic. And we don't have any evidence of that I've seen in Ghana. No evidence of large numbers of people moving from urban to rural areas, which I think is really interesting because the largest similar shock that I could think of in Ghanaian history was the expulsion of Ghanaians from Nigeria back in the 1980s, when there was real fear of social unrest and chaos. And we didn't see much because so many of the migrants just went back to rural areas rather than staying in the city, I think was a big part of the response back then. And we don't see anything similar in this COVID response.
I think that sort of brings up a very interesting point too about sort of it's at one level you can look at this simply as a shock, as an economic shock. How do you think the pandemic and the sort of government response to that is different or similar to other shocks that you have observed in Ghana or elsewhere? I mean, what should we sort of compare this to assess proper policy responses on the sort of economic inequality side?
It's it's difficult to say because, of course,
we're still in it, right? So
there really hasn't been anything like the COVID. And so it is difficult to say. I think that in large part, I don't see anything which is over and above what they normally would do in the presence of adverse shocks. Of course, we continued. Of course, again, like I said, the pandemic was or has been an incredible shock that no one really could anticipate how huge it was in terms of not just livelihoods, but also lives. And the two were intricately linked in a way that, I mean, you had to try and then deal with it. So you did see a sense of policy trying to do everything, little bits of things, but also being constrained by the physical position. And so even with the kind of, well, income transfers or the other transfers that government wanted to do, it was quite limited. Okay, and wasn't anything over and above what the regular LEAP, for instance, was doing. So for instance, you didn't see, of course, I think that within particularly the urban areas where the lockdown was, there was the issue of actually providing a hot meal for relatively poor households in a bid to, because economic activity had literally come to a halt. But again, there wasn't any aggressive policy, for instance, to expand the scope of the livelihood empowerment, the cash transfer program, in the presence of the pandemic, or indeed even increase the amount of the cash transfer that was being given to the beneficiaries. So I don't think there was anything over and above what the government did than they would have done in the presence of lesser shocks, in my view.
Good. Chris, do you have any thoughts on that?
Yeah, I don't have anything to add to that. I think the COVID's a special situation because it was so fast, and it was very difficult. And it was very.
I guess that's partly what I try and get at. You know, what type of shock is this? You know, it's maybe, you know, it's fast, but it's also the duration is unknown. There's maybe more uncertainty about what exactly will be required down the line.
Yeah, and so you do stuff that doesn't necessarily make sense, like
but there's
give people relief
3D
from electricity bills because you can do it. Right? Yeah. It's not necessarily that it's well targeted or well connected to the crisis, but you can do it. Whereas you can't do much of what you would do in other circumstances of crises.
Were there? I think from my understanding, you do have some comparative data too. How does the policy response by the government, but also the intervention of cash transfers, which is shown to be very effective in across a whole range of settings. How does that compare to other countries in the region or elsewhere where you see maybe differences in terms of how much the pandemic affected the economy and employment, how much cash transfers sort of addressed many of the issues around food insecurity in particular?
Yeah.
Well, I think that at least within the Sahel region, and I'm currently doing some work with some colleagues on that, you do find that the cash transfer really has been very positive for particularly very poor households. And again, the results that we showed, I think on one of the slides that we spoke to, you do find households referring to the use of their savings as being key for dealing with that shock. However, for a majority of these households, particularly potential cash transfer beneficiaries, savings is nil. It's literally zero. Of course, they could have some assets in, like say poultry or goats, but again, these are assets that households, some of them did dispose of in a bid to try and then sort of cope with the shock. So you do find that for all, at least for all the Sahel regions, for all the countries that we have looked at, Mali, Chad, Burkina, Nigeria, you do find that the cash transfer was actually key, and most of these households, based on the World Bank's the high frequency surveys, show that most of these households indicate that these were important in how they actually coped with the COVID.
So I'd like to ask a sort of simple but difficult question last. If you were to advise governments in the region how to prepare for the next pandemic, what would you tell them to do to, you know, from what you've learned? What are some of the lessons that we've learned in terms of proactive preparedness?
Well, one thing that's clearly needed is an ongoing, continuously maintained registry for social protection. So we have to know who needs resources, and we have to have ways to get them resources as quickly as possible. Ghana doesn't, no place that I know of in West Africa has an up-to-date, constantly maintained registry of people who are eligible for social service. That's comprehensive, and that needs to be stopped.
So you wouldn't have to rely on very blunt sort of non-directive measures potentially.
Precisely.
Yeah, but for second order policies, I think that the general economic performance of these countries has to improve. General economic management of these countries have to improve. I mean, so for take Ghana, I mean, our debt position is really hitting the roof now, and it's actually sort of inhibits how we can actually respond to the crisis. And Ghana is not the exception here, other countries as well. And for many of the households that coped well with the shock, it was because they had savings.
Yeah.
It was because they had savings. And so the economic performance, I mean, whilst we look at policy at the micro level, we cannot forget that the macro level policies, so that we actually are able to achieve broad-based growth, will be critical if we have to actually deal with another shock in the next 20, 25 years.
Thank you. I think that it's a really nice place to end it, because it shows the parallel of sort of having resources and capacity available at different levels, right? At different economic actors to respond to unexpected adverse shocks. I think that's pretty clear. We're at time, and we like to finish right on time so that people can move on to the next one. So I'd like to thank you very much again, Robert and Chris, for sharing your time and insights with us. Thank you everyone for joining us today for our webinar. And just for a quick announcement, the last one will be 2 weeks from now on June 15th, same time. And that will conclude our series on reducing inequality for this quarter. Nicole Pinkard from Northwestern School of Education will talk about pathways to equity, pedagogical-based social networks, new media literacy learning outcomes, and ecological models of learning. So until then, stay well and be healthy.
Thank you very much.
And thank you again. Thanks so much for joining. It's really, really insightful.
Thank you very much too.